Hello, this is Brad Harvey with Harvey Investment Management, and today's question that we're going to answer is, what is FDIC insurance? Well, FDIC stands for the Federal Deposit Insurance Corporation, and it is an entity that was created to protect depositors' money if banks went under. That current limit is $250,000 per depositor, or if it's a joint account, it's $500,000. What this means is if the bank fails, then the feds will come in and they will pay off the depositors dollar for dollar up to the insurance limit. Now, recently in the news, we had Silicon Valley Bank that failed, and the FDIC limits only covered about 4 to 5% of the total deposits in that bank. So the feds made the decision to ignore the FDIC limits and pay off all the depositors in whole. I think that in this particular case that might have merit, although I would have done it differently. I'm not so sure that doing away with the moral hazard of having these very large uninsured deposits is good for everybody. There are alternatives. If you have more than the $250,000 or $500,000 threshold, then you can buy treasuries, you can buy CDs from other banks, you can do all sorts of things to maintain a high level of security and low risk. However, in this particular case, they kept these very large deposits sitting in those bank accounts uninsured. Perhaps the federal government ought to revisit those limits and raise them significantly, but do I think they should go up to the billions? I really don't. FDIC insurance is there as a safety net if banks get into real trouble. However, those banks need to be held accountable for doing things that are not appropriate. And in the case of Silicon Valley Bank, they were investing the depositors' money, which is perfectly legal, their reserves. They were going out long in treasuries, particularly in the fourth quarter of 2021. That timing was terrible, and those investments went down dramatically as interest rates came up. So the feds decided to go ahead and pay off all the depositors, and in this case, maybe that works. But I don't think a blank check makes sense, and I think it's pretty naive if the government thinks that we don't know they're using taxpayer money for this in some way, shape, or form. Come on, let's be real. If it's a government-controlled dollar, it's essentially a tax dollar. So this is Brad Harvey with Harvey Investment Management answering the question, what is FDIC insurance?